Welcome to Total Money Management, going over the week that was July 21 to 25. How are you, Steve?
Good, mate.
No Jacob tonight.
No Jacob. Yeah, there's a T, there's a Tom, there's an M, there's Moriarty, but there's no senior.
He had better plans.
Yeah.
Better things to do.
Embezzlement of money or something.
So we weren't meant to say that. So
he's a good lad. He's a good lad. Right. What do we got, Tommy? What do we got?
Well, what's on the menu tonight? Markets getting ahead of themselves.
I think so.
Continuing to party hard. Institutions selling to retail. Looks like we had a little bit of a pullback last couple of days, but nothing serious.
Yeah, it looked. The broader picture is, from my perspective, it just seems, and we're going to do this in the next newsletter, is just sort of, as we tend to do, is focus on valuation, but also things can be overvalued for a really long time. The thing that really starts to indicate you're sort of at the top or, you're getting a bit crazy is investor sentiment.
Yeah.
Right? That's usually when, like institutional investors are now selling to retail investors. That's usually not a good sign, right? They're retail investors are usually the last ones in. Oh my God, the stock market's booming. We should buy stocks. Hello, sucker. And they don't know anything about valuation. They don't know much about that. They just think you can make money in stocks. And that's margin lending is the highest it's ever been. So there's all these indicators that are just going ding, 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 look, it may well carry on for the rest of the year, but it just looks like there's the sentiment is extreme greed. So there's that, there's just lots of things. And just to give you an idea, the next newsletter, I was scrolling through my phone at a series of charts, right? And we started with the Cape, right? And I sort of went, wow, 39. And then looked at the next one and went, wow, that's really crazy. Looked at the next one and went, man, that's ridiculous, and just kept scrolling going, crikey, everything's just batshit crazy.
Yeah.
And it's just, it feels like we've all sort of switched off a little bit. Like, tariffs, it doesn't matter. Wars, doesn't matter. It's all good.
Business as usual.
Yeah, let's keep piling in, right? Bitcoin's booming, everything's, real estate, it's everything just seems to be going off. And that's when it doesn't really sort of make sense
No, but since we started this podcast, we've been saying the same thing. It keeps surprising us.
Yeah. Well, yes and no. You see, things can, and again, this is fairly standard, that things stay overvalued for a long time.
Yeah.
Right? Because they don't, you hear this argument the Cape's been high forever. Yes, but it doesn't mean that we haven't been making money. It's just saying, well, instead of using $1 million, I'm using $500,000 or something, I'm just using those figures. Whereas, and what you find is you always look like a bit of a goose towards the end, right? Because generally markets climb and then the end part is a melt up, right? Which is like, boom, everything takes, but then it crashes, right? But during the melt up, you look like an absolute loser because you've got a really low asset allocation, right? Even though you might be still making money, the measuring stick becomes you're not making as much as me.
Yeah.
Right? Even though you might say, hey, well, I'm doing all right. Other people are like, well, you're not doing as well as me, blah, blah, blah. But it's, as we sort of emphasize, don't lose money, right? Which is...
Yeah, I'll keep most of mine.
I'll keep let's come back every 6 months and see how we're going because I'll still have mine. What about you? That's the really critical bit.
Yep. 100%.
So, yeah. So it's just... It's hard to explain if you haven't been through it. That's why I think this period is really, really important because once you see it, you then can't, as they say, unsee it. You just look at it and go, oh, man, yeah, okay. And it just, as I say, I was watching an interview of Jeremy Grantham the other day and he was talking about bubbles, the great ones, 29 and the Japan bubble, right, and the dot-com bubble. And he was basically saying, they're the sort of ultimate bubbles, and they're all the same, where they have these same characteristics, where you get people who diss any argument about being a bear.
Yeah.
Right? And you sort of see that a little bit in the Australian property market. Like it's, if you're not in it and you complain about it, people just absolutely, lather you up. Right? Oh, well, and it's just that's what you get in the stock market as well.
Yeah. And then, after the bubble's popped, hindsight kicks in.
Yeah.
Oh, we actually were in a bubble. Who knew?
Yeah, absolutely.
It's hard to see, right, at the time.
Yes.
What else are we talking about? Trump trade deals, America first, and China shock Mark II.
Yeah, a couple of things there. Trump started publicising some trade deals. He did one with the UK. He got one with Vietnam and Indonesia and the Philippines. And he announced one this week with Japan last few days. It now turns out, like Trump said, the Japanese are going to invest $500 billion, right? So that's $500 billion. That's a decent whack. But Trump gets to decide where it goes, right? That's what I mean. I mean, it's like we're a democracy, bro. So there's all now. It turns out the tariff was going to be 15% on Japanese cars, right, coming into America, right, and there's 25% on other stuff. But the Japanese then came out and went, nah, we haven't spoken to the president on this. We don't, we're not. And Trump also said Japan's going to drop all the barriers to America's trade, right? No tariffs from Japan. And the Japanese are going, nah, that's not the way we see it.
Yeah.
So
wait, when did we agree to this?
Yeah. and you just get a bit of the vibe that Donald is, shooting before anything starts actually happening. Yeah. And again, well, to give you, like we've said, when Trump announced the trade deal, Japanese car makers went, their price went up like 8 or 9%, right? And then the Japanese turn around and go, no, actually, that's not our interpretation. So this is what I mean as an investor. You're going, oh, Jesus, what's going on here? Are we up? Are we down? Is the story true? Is it not true? There's a heap of that stuff going on, and that's why I say to investors, you've got to learn about geopolitics, right? Because it's going to be really, really crucial.
Yeah, well, Trump's basically playing the stock market like a fiddle.
A little bit.
It sounds like people are hanging on to his every word. He says one thing, markets respond instantly.
Yeah.
Says another.
Yeah, but the other thing is too. See, there's a lot of this stuff around crypto with Trump. The Trump coin and all this sort of stuff. And there's all these arguments that he's basically swindling people with the cryptocurrencies and stuff. And that's what I mean. Everybody's going, and that's why you look at it and go, well, at that point, not just with crypto, but with Trump overall, you'd be going, man, we should be conservatively placed here, right?
Yeah.
We don't know what this guy's going to do. But everybody's nuts, right? The market's at all-time high. Gold's killing it, Bitcoin's killing it, stocks are killing it, property's killing it. Like you just look at it and go,
we're all going to be rich forever.
Well, a little bit, yeah.
Oh, there was a good post that you put in the week that was from Twitter, by the look of it. Not calling a top here because of AI, yada, yada, but White House eliminates day trading regulations, Polymarket returns to US, Robinhood enables 24/7 EU gambling, the architects of the 2022 SPAC bubble are posting, CNBC guys have a crypto treasury play, and WSB meme crashes 40% and almost closes negative. If we blow up later this summer, can't say there weren't signs.
Yeah, that's what I mean. You
look everywhere and you go, what is going on?
It's becoming a bit. It's sort of saying it's lawless is not right. That's sort of like an exaggeration, but it's getting to the point where it's like, man, this is starting to get like the Wild West, right? And it's I'm serious. You look at it and go, Jesus, this is looking really crazy. Like some of the stuff is just out of this world. And when you consider, look, if markets were, quote, normal, I'd be going, oh, well, okay, yeah, cool. But when you're talking about trade wars, you're talking about land wars, this week Thailand and Cambodia, the last couple of days, decided to have a border dispute.
Oh, yeah.
Right? So they're at each other. Ukraine and Russia are still going, right? who's the other ones over in the Middle East? Like they're all just, they're all fighting each other over there. You just look at it and go, my God, the world's aflame. How's the stock market? Oh, yeah, it's killing it. Like you should be going, really? You sure?
Yeah.
It's like everybody's lost their bloody marbles. It might be just me. I don't know. But
it does have that feel.
It does a little bit. There is one thing, a couple of things I want to mention there. One is one of the things that strikes me as a little unusual is when you read the speeches from a lot of Trump's appointments, they're talking about bringing American manufacturing back,
yes,
right, to America, right? And that's the point of the tariffs, right? So I read a speech during the week by Ambassador Greer, who's a trade ambassador, and the speech is all about how we're going to bring manufacturing back to the United States. And it's not long. It's like 14 pages or something. But I was just interested to read that, reading a lot of other stuff, and which is formal authorised government policies, and just reading the finance papers that don't seem to think that this is a serious gig. I just think there's this overall, it's that T.A.C.O thing, Trump always chickens out, but there's just an overarching thing that I don't think there's a lot of general public or people in finance who are taking Donald Trump seriously. I think a lot of them are a bit like, I saw one during the week, people going, oh, well, he won't be here after the 2026 midterms. One of them was, he'll drop dead soon. And, like there's all this stuff where people just don't seem to believe that Donald Trump will run the 4 years.
Yeah.
And I think that again is just part of the everything's going great, Like in their mind, Trump is trying to mess it up.
Yeah.
The one thing I do think that came out this week that is serious is the Epstein files. Donald Trump being on the Epstein files with the stuff with Jeffrey Epstein.
Yeah.
That's pretty serious. That could do him some real damage.
Who released that?
Sorry,
Who released that?
They haven't released it. What's happened is the Epstein list is the offenders, right, for Jeffrey Epstein. Trump was informed in May by the Department of Justice that his name was on the Epstein list.
Well, wasn't Trump at one point going to release it for everyone to see?
That's exactly right.
Yeah.
Right, because Bill Clinton's on the list, right? Clinton's well known for that sort of behaviour, right? And Trump is the same. But for some reason, I don't know why, Trump must have thought he could get away with it, right? But
quickly scrub his name off.
Yeah, like, I met him a couple of times. It's like, here's 400 photos of you and Epstein together. Okay. So that's something that could be really serious for him.
Yep.
Right. And again, everything's so fragile. I think anyway, everything's so fragile that it's not. As I said before, it doesn't necessarily have to be an economic event that tilts the market. Right. Trump could resign, or there could be an impeachment. Stuff where it creates even more uncertainty. That's when you start to get real problems.
Yeah.
Right. And that last point there, China shock mark too. What's happening now is the Europeans, and particularly, I shouldn't say particularly, and the Asian countries and South Americans, Brazil and stuff, they're all starting to really feel the pinch of China's trade policies. So the Brazilians are saying to the Chinese, we don't want your cars, right? And China's, so there's that. The Indonesians want to put a 200% tariff on some Chinese imports. China wants to build factories in Vietnam to get around the American sanctions, right? Because they know what's coming.
Yep.
So, and what's happening is the Europeans are now saying to the Chinese, well, hang on, no, you can't just flood our markets with your cars. And we talked about this before, but it's getting more and more intense because the longer it goes on, the more fragile it becomes, but the more something bad will probably happen because it's not getting resolved, right? And that's That's the real problem. So I think the longer this goes, I mean, last week, Trump's only been in for like 5 or 6 months.
Yeah.
And it's been fucking chaos from the day he got in, right? So it's hard to look at it and justify a market that's, unbelievably overvalued.
Yeah. Well, I mean, it's hard to see it ending well, right?
Well, it won't. But as we said, it's just a matter of whether it ends quickly or whether it ends slowly.
Yeah.
But it will end. That we do know.
Oh, man. Well,
Oz economy?
The Oz economy. China's finally admitted it's facing a crisis. Finally.
Yeah, well, yeah.
Everyone's trying to tear over.
You can't
We
trust-
don't want your stuff. It's all good.
You can't trust the communists. But basically, this is, again, blowback, right? Like the communists, the Chinese model is the same model that the Japanese used, that the Brazilians used, that the Russians used, and it always ends up with the same problem, right? Too much debt. And the problem is there's no way of going other than a debt jubilee, right, which has been used before, where basically you just go, righto, we'll just cancel all the debt and start again. But so long as that private debt is there, mortgage debt, consumer debt, all that sort of stuff, you've got to pay the debt back, right? And the more and more of your income that you have to pay back means the less and less of money that you've got to spend. Right, and that's what China's really hitting the wall now, because, as I said, with the exports now the exports are booming from China.
Yep.
But that's going to stop because, as I said, those countries are going to go, dude, we don't need any more of those BYD cars. All right, you're ruining our industry. We're going to have to work something out. That's where China's got a problem. But it seems to me that President Xi is just basically doubling down. He's like, just go harder. And it's like, mate,
you're going to end up getting stuck with a whole lot of stuff you can't sell.
Absolutely.
At some point that you've paid to build.
And there's another picture there, which is, the question in Australia, looking forward, do you expect that next year or so we'll be better off or worse off? And basically, 28%, the personal outlook, right? 28% of people said that it'll get better, 28% said it'll get worse, and 44% went, don't know. In the national outlook, 25% said it'll get better, 42% said it'll get worse.
Yeah.
So just, again, Australia is really struggling, even though we've got low unemployment.
Yeah, people are feeling the pinch, right?
Yeah. So that's why, I continue to bang on about people complaining about the government deficit. And it's like, and Jim Chalmers came out, I think, yesterday and said the deficit will be smaller than what they thought. So in other words, they're hardly spending any money. So we're just all sitting here relying on private sector borrowing. And as you can see with the other two charts, we know what people are borrowing for.
Yeah, it's just going into housing.
Yep.
That chart's nuts. So anyone who's signed up to the week that was will be able to see it. If you haven't yet, jump on the website, sign up, and you can kind of see what we're talking to. Chart here showing house price to income ratios. We've got the US at 4.8 times income, Canada at 6, New Zealand at 7.7, and Australia at 9.7.
Yep. But notice there, Canada, the US, and New Zealand all fell around December 22.
Yeah, as rose.
As we did, but then in 23, we've boomed again, right? Whereas they've continued their slide down. So, and the article below that, right? Interstate investors swarm Northern Territory homes, shutting out locals and raising rents. And this is, again, what I keep talking about. You can't talk about the housing market fundamentally as a house. It's people speculating and using it as an investment.
100%.
And so it takes on the same characteristics as the stock market, right? Or the crypto market, or the paint market, right? Or vintage cars. And investors going to Northern Territory, I mean, geez, it's a bit of a stretch.
I mean, the sentiment is, like, it's so typical. You got to get in early.
Well,
like when people talk about housing, they say get in as early as you can.
Well, yeah, but it's also too, Tom, the stuff about, they're going to cut rates. So, get in now. And again, I think the other thing is too, what I find is, if people say, and I think I said this about 12 months ago, if Sydney's too expensive, what do? Well, you buy a property in Northern Territory, right? Because in Sydney it's 1.6, in Northern Territory it's 6, right? So you go to the bank and say, look, I want to buy a property in Sydney, and they go, no, you can't, an investment property, right? And you go, well, how much can I have? They say 800,000. You go, okay, well, and you buy one in the Northern Territory, right? That's what I mean. It's just it's just really, jeez.
Well, if rates drop,
well, it just makes it worse.
Next time this chart's posted, Australia 13 times. Anyway.
Yeah, crazy. Righto, well, shall we hit the lessons?
Let's do it.
Righto.
Valuation.
As if we haven't talked enough about valuation.
From our assessment, it's becoming more and more overvalued, if you didn't know.
Yes. So the question is, when you have a high market, a lot of people say, well, how much should I have in the market? Now, the right answer is, well, it depends, because the market can always get more expensive, right? So that's part of the problem. The other problem is, how far do you think it will fall? Well, what we know is from a CAPE of 39, the only time it's ever been higher is 44 in the dot-com bubble, right? And it fell 50%. So you would generally expect a somewhere around 50%. The NASDAQ in the 2000 bubble fell 82%. Now that today would seem sort of like, it's not going to fall that. But that's what they said in 2000, right? And at the moment, I'm concerned that AI and the Mag 7 have just become completely unhinged. So again...
That is an understatement.
Well, yeah. And, you could sort of half get it with NVIDIA by going, well, AI might be big.
Oh, NVIDIA's red hot company, great product. Is it worth 2 Australias?
Well, it's on the front part there, the first page, right? NASDAQ hits record ahead of big tech's earnings moments, right? And it's just, but it's hard to justify when you look at Tesla, right? The Tesla sales, Elon came out with a call during the week. It was awful, right? The free cash flow, the expected free cash flow was 740 million, right? The cash flow that he posted was 150. So in other words, it was a bit like, dude, you missed it by 600. So, and now he's talking about robots, right? This bullshit about Optimus, the robot, and said, we'll be making, what was some stupid figure, like 10 million robots in 5 years' time or something. It was like, oh, Jesus, like the bloke's a cokehead. It's just ridiculous. Anyway, I'm getting off that track. Look, the point being, God, he makes me mad, that guy. We've got 2 charts here. One is, again, what we often say to people is you've got to look at real returns, and over the long term, there are periods where the S&P lags behind treasuries, right, which is bonds, right? So in other words, a 10-year bond might be 4%. You put your money into the S&P, and over the 10 years you get 2.
Yep.
Right, which means you should have been in bonds. But there's extended periods of like 20 years, right? So the S&P 500 total return, right, lags Treasury bonds from March 1998 to March 2020. That's 22 years, right? S&P total return lags Treasury bonds from December 1968 to December 1987, right? So there's 20-year periods where you can spend your time going absolutely nowhere. So, but what do you notice about all those times? You notice all those times the CAPE ratio is really, really high.
But also, like the stock market wasn't as accessible then.
Yes.
Was it? You know what I mean? Like everyone has a phone, a smartphone, and they're always glued to it.
Well, it's so much easier to get more people involved now.
100%.
Like you said at the start, now they're talking bloody day trading. Like I've noticed this even among young people, right? They gamble. My son does it, right? He goes to the pub and it's like, I put in 10 and got 100. His friend, I'm not kidding, during the week, if you're from the Australian Tax Office, close your ears, his mate won $3,000,
Yeah. You don't
Right.
get taxed on gambling.
Don't you?
No.
Right. Okay. So
winnings.
he won 1,200, then he won 1,700.
And the problem is he's going to rinse half his paycheck for the next 2 years
Yeah.
chasing that again.
But that's what I mean. You know, and my son does it. They go to the pub, right? They have a feed, they have a beer, and then they smash the machines.
Hit the pokies.
Last week was his mate's 20th, last Saturday, and they went to a hotel, you know, had a meal and a few beers. Where'd they go after that? The casino.
Yeah.
Right? And put money through the machines. But anyway, my point being, okay, we've got a really good chart here. As Tom said before, you know, jump on, get the newsletter, get the week that was if you want it. It's basically showing you the way you should allocate your money. The hardest part of, and I wrote about this in the blog last week, the hardest part is over allocation, right? And that is generally people staying at the party too long, right? Because as you say, as I've said, if you start with 100,000 and you come back and you're now worth, you know, 500,000 after a 15-year bull market, right? And, you know, old idiots like me come along and go, mate, you really should take all of that profit because the CAPE ratio's at 39.
Yeah.
Most people go, mate, you don't know what you're talking about. You've been wrong for years. I'm partying on, right? And they're quite legitimate in doing that.
Yeah.
But
at least sell half.
yeah, but well, I know, but that's what I mean. You sort of say to people, even if you say that, Tom, and say, okay, well, take some off the top, right? They take 20%.
Yeah.
Right? And also, you know, all the institutions are 95% invested. So why the hell should I be 50? Right? There's all that sort of stuff. But what it really shows is when the market's really, really cheap, put lots of money in. Right? And that's the problem because most of, like I said at the start, the retail investors are now piling in. And it's like, guys, you should have been here 15 years ago. But 15 years ago, the market was really volatile, but the CAPE was like 12, right? And that's the problem. People over-allocate by letting their portfolio grow. And that's why I'm saying, if I said to you now, oh, Tom, the CAPE's at 39, how much money you got? And you've got $500,000. I went, great, throw it all in. You'd be going, what, are you an idiot? But because it's grown from 100 to 500, you tend to think, oh, it'll be all right.
Yeah.
Right? That's the problem.
Yeah. What if it gets to $1 million?
Well,
but the other problem is, right, especially, you brought up gambling, and it is like that. Like, you go on Reddit, you saw the GameStop stuff.
Yep.
Like, you're seeing people talk about in communities and pump little companies that can move.
Yeah. Oh, yeah.
You know, and that's exciting.
Yeah,
that's like
I know, but it's just
like
that's what I mean.
you know?
Everybody's gambling.
Yeah,
you know, my son's at the bloody poker machines. My cousin's at the property market. I'm in the stock market. You're in the Bitcoin market. It's just like everybody's like gone nuts, right? Anyway, so the other one is the lesson from history. All I wanted to point out here, not valuation, is mean reversion, right? And again, you really got to have a look at the chart. But the point being, when you look at countries that are negative at the end of the year, generally, right, broadly, the next year is positive. Okay? Now, it doesn't work all the time. That's why we have asset allocation with a cash portion. But what you find is most countries that have a negative year, the next year is positive.
Yeah.
Right? And so what I'm sort of hinting at is you might want to go and look at where the countries are that are losing money, right, but in 12 months' time. Like, I think Thailand, which is we've talked about and I think is really cheap, is down about 15%.
It's down 13% at the time this graphic was posted.
Yep.
The chart on the week that was document is the emerging markets quilted returns from the Novel Investor.
Yeah,
it's a great website.
Yep.
And it's just very visual and quickly highlights what Steve's kind of talking to here.
Yes.
Because, like, if we go look at 2024, look at the bottom three, we've got Egypt. It was down 31% last year. It's up 10% this year. Brazil was down 29.5% last year. It's up 29.4% this year. Mexico was down 26.8% last year. It's up 31% this year.
So that's And that's what I'm saying. When you look at those countries, even if you said, okay, the next one's Korea, which is negative as well, minus 23, it's now up 39. Indonesia, is that, I think, minus 11. It's now minus 3.2, right? So there's one that's still down, but it's not down a lot. Poland, minus 5.7, now up 52. So, again, when things are really ugly, you've got to hold your nose and go, okay, it's time to buy some.
Well, that's the opportunity.
Absolutely.
Yeah.
Well, as John Templeton said, you can't do everything like everybody else and expect to get better results, right?
Yeah.
If you follow everybody else into everything else, well, don't expect a different result. You've got to be contrarian, i.e. buy at the bottom, sell at the top, and you've got to be prepared to cop a bit of pain by waiting.
Oh, yeah, that's the thing. We've definitely brought it up on the pod before, but if you're buying something undervalued, it's not like you're going to buy it and expect it to be green right away. It's probably going to keep dropping and it's going to look average for a while. And that's why you just know that you're going to be holding this for a little bit.
Yeah. Well, it's also too, Tom, one of the interesting aspects, and we need to deal with this a bit more when we got time, is talking about time, right? Time itself.
Yeah.
Because it's really, really important about how you think about time with investments, right? Because like you say, if you buy something that's awful, all the studies show that generally there'll be a momentum, there could be further hatred, right? So you can buy Brazil, last year and it might do nothing for 3 months, right? And in fact, it might fall another 5%. That's when you're looking at it going, oh man, I've made a mistake here. I feel like I've made a mistake, right? Then when it turns around and it shoots up, that you forget that you were thinking I made a mistake, right? You're now going, oh man, this is really great. I love this, right? So you've completely forgotten about that where you were going, oh, maybe I should sell out and try again and stuff.
Oh, I'm up 30% now.
Yeah. So, it's that way you think about time, because, if you're using a short-term strategy, it doesn't mean you can't be long-term, right? And that's what we're talking about well won there, So there's all these things where if you sit down and just think through, it's generally fine. The hard part is avoiding the panic, right? Or the locking in like, oh, I made a mistake, or, I'm doing this wrong or something.
And that also only happens if the asset allocation's wrong.
Yes.
Because, you're not going to sit there freaking out if you've got the allocation right.
Yes.
It's just that simple.
Yeah.
But I know from experience, every time I've had one of those feelings is when I've gone, in my earlier years, I've got this much money, all in.
Yeah.
And I'm going to watch it every day. I'm going to panic, and I'm going to check with Steve every second day. Should I sell yet? Should I hold on?
Well,
You're going, shut up, I already told you.
It is, I sort of say to people, when you invest, start small, right? Because invariably you lose money, right?
Yeah.
You cannot make every investment a winner, right? You're going to lose money, especially when you're young and inexperienced, right? We've all been through it. I've lost heaps of money, right? And the last 5 years, I don't think I've lost anything, right? Because I've now been doing it for 25 years. My first 5, that was a different story, right? Because I was, like you said, this looks good. And I heard it on some newsletter or something. Oh, that's a no-brainer, right? 10 grand into that, 20 grand into that. I did a what was a bloody thing? Those tax efficient forestries, right?
I don't even know what that is.
Oh, mate, I did sandalwood.
Oh.
Right? It was, Australia was going to be a lock on sandalwood or something to, and it sounded great, right? And I put 25 grand in. It's like, gone within 12 months or something, right? And I mean, the company just completely folded, right? It just, stuff like that. And I looked at it at the time and just thought, we're gonna monopolise sandalwood, right?
It's 1 cent a share. Wait till this hits $1.
Man, I am gonna be rich, right? And poof, there goes 25 grand.
Yeah.
And then I can tell you plenty of other stories as well. But I do have some winners, folks. Our coal stocks are performing very, very well.
Yes.
But anyway,
All right, I think that's a wrap.
All right.
Thanks again for listening. For everyone that jumped on Spotify and gave us a rating, I really appreciate it. If you're listening and you haven't, please, it helps out a lot.
Yeah, so Jacob needs your love because he's sick.
Oh,
Well, he's not. He's at the Broncos
yeah,
game. But
can't be
anyway.
that sick. All right.
Okay, cheers, folks.
As always, remember, we don't provide financial advice.